It's Monday, the 24th of August, 2020. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. State governments are under pressure to create jobs and open borders as the federal government and bureaucrats work to boost economic growth. That's our main story. Also coming up in today's podcast, how JobKeeper is making some companies more profitable. One of Australia's biggest businesses gives fossil fuels the flick, and Clive Palmer extends his multi-billion-dollar fight with Western Australia. Later in the podcast, I talk to Centennial Asset Management's Matthew Kidman about his take on the earnings season so far. But first, here's a brief look at markets. Wall Street ended higher over the weekend, with the S&P 500 and Nasdaq hitting new highs. Figures showed that both the manufacturing and service sectors improved during August in the US, while existing home sales jumped in July. Now, European markets were a bit softer, while the S&P ASX 200 ended the full week down slightly at 6,111 points. The market was supported by some solid earnings results last week, led by CSL, BHP, and to a lesser extent Wesfarmers. And the banks, though, didn't do so well. Westpac shares were down 4.5% for the week. Both oil and gold prices were a touch lower over the weekend, and the Aussie dollar is trading at 71.6 US cents. The federal government is pressuring state leaders to reopen borders, while bureaucrats and business leaders say it's time for the states to start doing some of the heavy lifting. New figures show that New South Wales is leading the way in terms of jobs growth. 315,000 people in that state who were stood down in April had returned to some form of work by July. The success of New South Wales in keeping a lid on new outbreaks while opening up its borders has become the gold standard, according to the Prime Minister Scott Morrison. The National Cabinet met on Friday and Mr Morrison was critical of border closures. Queensland Premier Anastasia Palaszczuk and Western Australia's Mark McGowan both face elections during the next 6 months and, along with Tasmania, have the strictest border closures. Now, border closures are popular with voters. The federal government now wants better definition around when borders should be closed and what constitutes a coronavirus hotspot. The National Cabinet also agreed to develop a National Agricultural Worker Movement Code to end anomalies that prevent farmers from crossing borders to tend crops and livestock. Now, at the meeting on Friday, Reserve Bank Governor Philip Lowe said state and territory leaders should collectively invest $40 billion in job creation measures over the next 2 years, including infrastructure, housing and training. Now, that's about double what the states have already put in during the pandemic to aid economic recovery. With the unemployment rate set to stay high for the next 2 years, all spending should be pushed towards job creation, the leaders were told. Now, the number of new cases over the weekend dropped sharply. In Victoria, there were 569 cases over the past 3 days, 14 in New South Wales. Queensland recorded 11 cases over the weekend, while Western Australia and South Australia each recorded 1 case. The Prime Minister knows he can't actually force the state leaders to do anything they don't want to do, but he does want to jawbone them into opening things back up. Outside Victoria, the national economy is clearly picking up. The federal government doesn't want it stalling again because of overcautious state leaders. It's a very fine line. In a moment, the rest of the news you need to know this morning. Thanks for joining us for another big week of Fear and Greed. Just a reminder, if you missed either of our weekend shows, you can find them in your playlist on your favourite podcast app. Or you can make it even easier for yourself and hit subscribe or follow. That way, the podcast makes its own way to you completely free of charge by 6:30 a.m, 7 days a week. Overseas news first up. The number of deaths from COVID-19 has passed 800,000 as the number of cases moved beyond 23 million. The US had its 4th day in a row with more than 1,000 deaths over the weekend. Mexico is under the spotlight after its death toll went beyond 60,000 from 556,000 cases. At least new outbreaks in Europe are proving less deadly than previously. Now, during the past week, France, Italy and Spain have recorded the highest number of new daily cases since May, while Germany's daily rates have doubled. But fortunately, fatalities are not increasing at the same rate. Now, there's a couple of reasons for that. First, treatment has come a long way in just 6 months. And second, Many of the new infections stem from younger people who have travelled and partied during the northern summer, and mortality rates of young people are much lower. Democratic presidential candidate Joe Biden said he would shut down the country if elected president to stop the spread of coronavirus if it was recommended by scientists. That's definitely a point of difference with President Trump. Meanwhile, the president is thinking about bypassing normal US regulatory standards to fast-track an experimental coronavirus vaccine produced by AstraZeneca ahead of the presidential election, according to the Financial Times. And the US House of Representatives have voted through a US $25 billion package to boost funding for the Postal Service ahead of the November presidential poll, which is expected to be the largest ever mail-in vote. President Trump has already said he doesn't think the election result will be fair because of postal voting, but he's pretty much refused to provide the Postal Service with any more money. The vote still has to pass the Senate. On to local news. 1/3 of all listed companies that have disclosed JobKeeper payments have reported profit growth during the current earnings season, according to the Australian Financial Review. Domino's, Southern Cross Austereo, K&S Corporation, Adairs and Corvest are all companies that have boosted earnings while receiving the payments. The success of some companies has convinced the federal government to rethink its plans to extend industrial relations exemptions to all companies beyond the end of next month. Instead, companies that have fully recovered are unlikely to be able to access the exemptions. Now, these exemptions give employers greater flexibility around running their workforce. It will be difficult for the government to implement. How do they give exemptions to some companies and not others? In any case, the fact that some companies are making a profit on the back of payments isn't such a bad thing. Aren't we trying to get money back into the economy? So far, of the companies that have reported, Qantas has been the largest beneficiary of JobKeeper payments, followed by the Crown and Star. Retail sales jumped 3.3% during July, according to the Bureau of Statistics, and that's despite more restrictive lockdowns in Victoria. Sales during July were 12% higher than the same month a year ago. That's the sixth largest year-on-year rise in almost 40 years. Just shows that outside Victoria, things are starting to pick up. There's even more confirmation of that in the property market over the weekend. Sydney's auction clearance rate was 72%, whereas Melbourne was just 50%. And the number of houses on the market is significantly higher in Sydney. In the weekend edition, I talked about changes to superannuation rules being a sleeper issue. Well, it's well and truly waking up. Over the weekend, the Prime Minister said whether the already legislated rise in superannuation contributions increased to 12% by 2025 would depend on the state of the economy next year. It looks like he's preparing the way for changes. Northern Territory Labor appears to have won Saturday's election, but possibly with a minority government and certainly with a diminished majority. Other states and territories are watching closely because it's the first election since the COVID-19 pandemic hit. Suncorp said it will stop insuring and investing in oil and gas projects by 2025. It's already stopped insuring and lending to new projects. Now, Suncorp isn't a big supporter of fossil fuel projects anyway, but it's a substantive stance from a major Australian company. The group announced a 27% fall in its underlying profit to $951 million, with earnings falling in both its insurance and banking businesses. But the result was much better than forecast, and shares in the group surged 12% on Friday. One story that's been bubbling along in the West has been the fight between billionaire and former federal member of Parliament Clive Palmer and Western Australia and its government. First, Mr. Palmer took Western Australia to the High Court over border closures. He eventually dropped that. Then he sued the state for $30 billion in damages over his stalled iron ore project in the state. It would have bankrupted Western Australia if he'd won. Now, last week, the WA government passed an emergency law to attempt to shield itself from any payout. Now, Mr. Palmer has launched unconscionable conduct proceedings against the state in the federal court. Basically, it's a field day for lawyers. A2 Milk has been among the better performing stocks over the past year, and it's lobbed a $245 million bid for New Zealand dairy nutrition business Mataura Valley Milk. Looks like A2, which has invested heavily in infant formula, wants the manufacturing capacity. The group announced a 34% jump in profit last week, and its shares are up 33% over the past year. Modelling by the National Australian Apprenticeship Association says up to 150,000 apprenticeship positions will be lost across the country by the end of the year as businesses close down. Occupation on the skills shortage list in the future will include air conditioning mechanics, motor mechanics, and electricians. Pathology and imaging group Helios announced a $70.5 million loss for the last financial year on the back of closures of some of its collection centres during the pandemic. Its imaging unit was hit by fewer surgeries, particularly in Victoria. The board cut the final dividend and Helios' share price ended Friday flat. Cybersecurity is a growing and worrying phenomenon. The corporate regulator is suing a former ANZ wealth management business, now owned by IOOF, for failing to ensure financial advisors under its control protected client data from cyber attack. The Australian Securities and Investments Commission claims the group failed to have adequate cyber security systems in place. Without commenting on the merits of the case, it's a clear illustration of the need for corporate Australia to take cyber security seriously and to put in place processes to address it. One sector that's done reasonably well during lockdowns is health and beauty retailers. People at home have bought more skincare products. BWX, which owns Sukin Natural Skincare Products, reported a more than 50% jump in net profit last financial year. Its share price rose 4%. And finally, I talked about it a few weeks back, and now it's happened. Mpol servos are back, with the first two rebrands opening in Sydney last week. Around 1,900 Caltex servos will progressively be rebranded Mpol during the next 2 years. Now, for those under the age of 30, it probably doesn't mean much. But for those of us that grew up with Mpol as a major service station brand, it's a bit nostalgic. Earnings season is well and truly underway. So this morning we thought we'd have a check-in with our favourite market analyst, Matthew Kidman from Centennial Asset Management. Good morning, Matthew.
Good morning, Sean.
Let's look at sectors. What have you noticed about how individual sectors have performed?
Well, just on a general comment, it's amazing how different this recession is. I mean, a lot of us can't remember recessions, but let's talk about a downturn. Going into a recession, you would have thought certain companies would do very well and others would struggle. You know, you would have thought hospital operators would continue to do well. They've struggled. You would have thought a funeral service provider like InvoCare would have done well, but it hasn't because of the nature of this recession. So you've had to play what's right in front of you, not pre-forecast anything, because you don't get out the recession textbook and say this is how you invest in this market. Strangely, you talked about retail. We've done pretty well out of retail because, and the sector as a whole has done amazingly well. At first, everyone thought it was just online sales, you know, the Kogans and the Marley Spoons and the Temple and Websters, but it actually flowed out into virtually every other retailer, JB Hi-Fi, Adairs, Wesfarmers, across all sectors. And it basically comes down to, I think, Australians, and it's the same in the US and various other developed countries, have been told where they can spend their money or told where they can't anymore. So you can't spend it on travel, you can't spend it on going to restaurants, you can't spend it on going to concerts or movies or whatever else it is, but you can spend it on your home. You can go and buy a new lounge, or you can go and buy a new bed setting or whatever, and those companies have been phenomenal. The other sector that's obviously done well, which is a much broader sector and it's going to vary between companies, is the tech sector. And you know they've taken advantage of everything they can. You've got companies like Atlassian, which not listed here, but just as an example, has told everyone that they can stay at home and work forever. That's very self-serving. I mean, it doesn't work for everyone, but it's great if you're using tech products. So the tech sector has definitely moved that way, and there's been a number of good reports. To say how to pick the reaction off the back of that, something like a WiseTech, which seemed to just come in line with everything else and then rally 30%, is a mystery. So it's been very hard to pick the movements, but you know, generally the consumer's done all right. What's done badly? Well, anything to do with travel has done really badly. Even though Corporate Express, which does corporate travel, as the name suggests, rallied a lot, it was more about how they'd reduced their costs and how government was still spending. Their business has been hollowed out. And, Qantas, what's Qantas got to do? Nothing except burn money at the moment and cut costs. So, some are really dire, but overall, a lot of sectors have done probably okay.
Now, looking forward, we're on the cusp of September. Normally, we're at the tail end of the football season, soon to start the build-up to Christmas. But things are going to look a bit different this year, not just because of upcoming changes to the government support packages. What would you like to see happen over the coming weeks?
Yeah, so add into that, September is traditionally a weak period in markets. So it wouldn't surprise me if the next 5-6 weeks are, counter trend, that we might have a small correction or, something a bit like we had in early June. That wouldn't surprise me, given that markets continue to track higher. You can always have a correction. What would I like to see? In the very short term, I'd like to see Victoria get its numbers down, which has started that process. It looks like I'd like to see after 6 weeks them get out of stage 4 into stage 3 with a program to go to stage 2 and 1. We would like to see, as soon as possible, borders between the states come down, and hopefully before Christmas. I'd like to see in the US, obviously, a smooth election. Whoever wins, wins. But you wouldn't want to see, a stalled process that gets stretched out, and then probably within a 3 to 6 month time frame, something positive on a vaccine. I don't think we'll actually physically see any probably till mid next year, but the market itself will want good trial results from these phase 3s from the various companies in it. They'll want the FDA to fast track their review of it. And say, if we get good results and then something good in from the FDA, maybe next March, February, March, April period, they would be all ticks. And I think they're also the biggest risk. I suppose the other thing is that I think what's being underestimated at the moment is that China's stimulating its economy, and there hasn't been much talk about it. That we would hope that China's recovery is set in stone now. China's gone very quiet from an economic point of view in the virus. Had a bit of a flare-up in June around Beijing, but it's kept on top of it. But, iron ore price is high. It seems like activity is pretty robust. That it would be really important that China keep on that path.
Matthew, insightful as ever. Thanks for speaking to Fear and Greed.
Thanks very much, Sean.
That was Matthew Kidman, Principal at Centennial Asset Management. My extended interview with Matthew is a must-listen for any investor. In it, he gives his thoughts on dividends, guidance, and why we've had so many impairments and write-downs this reporting season. He covers everything from small caps to Wall Street. It's well worth a listen. It's in bonus content now. Subscribe or follow Fear and Greed to find it easily. Thank you again to everyone who's given us a 5-star rating, and an extra big thanks to those who have taken the time to write a review. Please keep them coming. But did you know the best possible way to help out Fear and Greed is to tell someone else about it? Don't keep the podcast a secret. Tell your family, friends, colleagues, everyone. The more the merrier. There'll be plenty more debate this week over border closures while earnings season continues. Fortescue Metals should announce a bumper profit this morning. We'll cover it all. It's Monday, the 24th of August, 2020. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.